The American pickup truck market is in absolute chaos right now, and it's hitting Ford, GM, and Ram dealers harder than anyone could have imagined. Billions of dollars are being lost as inventories pile up on lots, trucks sit unsold, and customers simply stop signing the dotted line. For decades, pickups have been the golden goose of the auto industry, raking in massive profits and keeping dealerships alive, but now, that entire business model is showing cracks like never before. Across the country, you can drive by dealer lots and see row after row of unsold F-150s, Silverados, and Ram 1500s just collecting dust. What was once a symbol of unstoppable demand has turned into a financial nightmare, and the numbers are staggering. Floor plan costs are draining dealers, interest rates are eating away at margins, and incentives once almost non-existent for trucks are now quietly creeping back as automakers scramble to move metal. The problem isn't just one issue, it's a storm of challenges hitting all at once. Skyrocketing sticker prices pushed many loyal truck buyers out of the market, while higher financing costs slammed the brakes on even those willing to stretch their budgets. At the same time, supply chain recovery led to a flood of inventory hitting lots all at once, just as demand started cooling off. That mismatch is now costing dealers millions every single day, and it gets even worse for the big three because pickups aren't just another vehicle line. These are the crown jewels, the cash cows that fund everything from new EV investments to shareholder payouts. Without strong truck sales, the entire financial foundation of Ford, GM, and Stellantis starts to wobble. That's why the current inventory crisis isn't just a headache, it's an existential threat. Meanwhile, customers are noticing the shift. Shoppers who once couldn't dream of negotiating on a Ford F-150 or a Chevy Silverado are suddenly seeing discounts return. Dealer ads promising massive savings and trucks being stacked with cash on the hood. But even with those incentives, sales momentum isn't bouncing back fast enough, and the losses are mounting. Ford, for example, is staring down a brutal reality with the F-150. For years, it's been the undisputed king of pickups, the top seller in America, but now even the king is struggling. Dealers are calling out the company for sending too many trucks that customers don't want loaded with premium trims, sky-high MSRPs, and features that drive up the price but don't line up with what the average beer could actually afford. Trucks with $70,000 and $80,000 price tags just aren't moving, and that's creating a logjam of inventory that nobody knows how to clear. GM isn't doing much better. The Silverado and Sierra, once Ford's fiercest rivals, are also piling up. GM dealers have been increasingly vocal about the pressure of carrying so much unsold stock, paying interest every month just to keep those trucks sitting on the lot. And the worst part, these trucks are eating up valuable space that could have been used for more affordable models, the ones buyers are actually showing up to buy. Instead, GM is betting heavy on high-margin luxury trucks. And now that gamble is backfiring in real time. And then there's Ram. Stellantis dealers are facing their own crisis with the Ram 1500, especially as the brand struggles to balance incentives with profitability. For years, Ram rode a wave of success thanks to stylish interiors and aggressive deals, but the tide has shifted. Without constant incentives, Ram loses its edge, and with the current market slowdown, it's clear that brand loyalty isn't strong enough to keep sales humming. Dealers are feeling trapped, forced to discount more heavily while watching profits shrink with every sale. What makes this situation even more alarming is how quickly the tone has changed. Just 2 years ago, customers were begging for trucks, paying above sticker price, and dealers couldn't keep them in stock. Now, the pendulum has swung the other way. The truck market has gone from shortage to surplus, and the swing has been so sharp that even seasoned dealers are calling it one of the most difficult inventory situations they've ever faced. And the ripple effects? They stretch far beyond just dealerships. Automakers are being forced to rethink production schedules, slash overtime at truck plants, and quietly adjust their forecasts for the rest of the year. Wall Street is starting to take notice too, as analysts warn that declining truck profits could mean weaker quarterly earnings and less cash for those all-important EV rollouts. The very vehicles meant to fund the future of these companies are suddenly dragging them down, and that's a problem nobody expected this soon. Consumer behavior is shifting right under the automakers' feet, and it's hitting harder than they want to admit. Buyers who once saw a full-size truck as the ultimate status symbol are now second-guessing that decision. Families are looking at mid-size SUVs, compact pickups, or even crossovers because they simply offer more value for the money. Trucks that once seemed like an everyday necessity now feel like a luxury item, especially when monthly payments climb past $1,000. That's a line many Americans just won't cross at the same time. The rise of smaller trucks like the Ford Maverick and Hyundai Santa Cruz is proving that consumers still want utility, just not at the cost of a mortgage payment. The Maverick, for example, has been one of Ford's hottest sellers, flying off lots while full-size F-150s remain parked for months. That contrast tells you everything. The demand for trucks hasn't disappeared. It's simply shifted toward affordability and practicality. Yet the big three continue loading up dealers with premium, oversized models instead of aligning supply with what customers actually want, and that disconnect is growing more dangerous by the day. Dealers are stuck between two impossible choices: either slash prices so deep they bleed profits, or hold the line and watch trucks sit unsold, racking up interest charges with every passing week. Some have started quietly selling below cost just to free up space and keep cash flowing. Others are begging automakers to cut back on shipments. But with factories already tooled up and thousands of trucks rolling off the line, that's easier said than done. What's especially telling is how quickly this crisis has shifted dealer attitudes. Not long ago, many were riding high on record profits, flush with cash from the pandemic-era shortages. Now, conversations have flipped to survival mode. How long can they absorb losses? How deep should they cut prices? And what happens if this downturn stretches into next year? That anxiety is spreading fast, and it's creating a level of tension between automakers and their dealer networks that we haven't seen in years. And it doesn't stop there, because while dealers are scrambling to move inventory, automakers are staring at another looming problem: the resale market. Used truck prices, which were sky-high just 2 years ago, are now sliding downward. That collapse in used values is poisoning the new truck market even further, because nobody wants to pay a premium for a new truck when slightly used models are thousands cheaper and still practically new. It's a vicious cycle that's driving the crisis deeper, and it's showing no signs of slowing down. Financing companies and lenders are now feeling the sting of this downturn, and that's creating a whole new layer of problems for the truck market. Banks and credit unions that were once happy to approve oversized loans for full-size pickups are tightening their standards. They're looking at dropping resale values, sky-high monthly payments, and a growing number of buyers falling behind on payments, and suddenly, those big loans don't look as safe anymore. That means fewer approvals, stricter terms, and higher down payments, which only pushes even more potential buyers out of the market. Captive finance arms like Ford Credit, GM Financial, and Stellantis Financial Services are in a particularly tough spot. These divisions rely on truck sales for a huge portion of their lending portfolios. But with delinquency rates quietly ticking upward, they're forced to decide between chasing sales at all costs or protecting themselves from risk. Neither option looks good. Pull back too much and you choke off sales. Push too hard and you risk a wave of defaults that could ripple through the entire financial system tied to auto lending. And this is where the automakers themselves get cornered. Because if dealers are drowning in inventory and lenders are pulling back, the only lever left is production. We're already seeing whispers of reduced shifts at key truck plants: Kentucky for Ford, Flint and Fort Wayne for GM, Sterling Heights for Ram. Slowing down output is a last resort, but it's inevitable if inventory levels keep climbing. The problem is, cutting production doesn't just hurt the companies, it devastates workers, local economies, and suppliers who depend on steady demand from America's best-selling vehicles. That ripple effect is massive. When a truck plant idles, thousands of jobs are disrupted overnight. Part suppliers feel the pain immediately, shipping schedules collapse, and entire communities that revolve around auto manufacturing start to feel the financial squeeze. All because trucks, the very backbone of the American auto industry, are suddenly too expensive and too plentiful at the same time. It's a paradox that no one at Ford, GM, or Stellantis seems to have a clear answer for. And while all this chaos plays out, competitors outside the big three are quietly watching and learning. Toyota with the Tundra, Nissan with the Titan, and even upstart EV makers are seeing an opening. If they can position themselves with the right mix of affordability, capability, and smarter financing options, they could steal away frustrated truck buyers who feel abandoned by the traditional brands. The loyalty that once seemed unshakable may not be as bulletproof as it used to be, especially when wallets are stretched and patience is running thin. The EV pickup angle is where things get even more complicated because the very trucks that were supposed to represent the future are now colliding head-on with the current crisis. Take the Ford F-150 Lightning hyped as the next big revolution, but sales momentum has slowed to a crawl. Dealers are sitting on Lightnings that once had wait lists stretching a year out. Now, they're being marked down by tens of thousands just to get them off the lot. The same story is starting to unfold with GM's Silverado EV and GMC Hummer EV, where limited demand and high sticker prices are making it clear that consumers aren't lining up the way executives predicted for Ram. The Ram 1500R EV isn't even fully out yet, but already there's hesitation in the market. Buyers who might have been curious about an electric Ram are now second-guessing whether an EV truck makes sense at all, especially when traditional gas-powered models are being discounted heavily. Why commit to a $70,000 plus EV experiment when you can scoop up a brand new gas truck for far less, with proven range and refueling convenience? That's the dilemma playing out in real time, and it's putting Stellantis in a tight spot before they even get their flagship EV pickup out the door, and this creates a dangerous crossroads for the big three. They need profits from gas and diesel trucks to fund their EV future. But those profits are shrinking fast as incentives rise and inventories swell. At the same time, they can't abandon EV development because Wall Street, regulators, and future market trends are demanding it. The result? They're stuck trying to juggle two collapsing towers at once, propping up traditional truck sales while throwing billions into EVs that aren't delivering the returns they hoped for. What makes this even riskier is consumer confidence. Truck buyers are practical, loyal, and value-driven. When they see automakers pushing ultra-expensive EVs while ignoring the affordability crisis in the gas truck segment, it sends a message that these companies are out of touch with their base. And once that trust cracks, it's very hard to repair. That's why you're starting to hear more truck owners talk about holding onto their current vehicles longer, shopping outside the big three, or even abandoning pickups altogether. That's not just lost sales today, that's lost customers for years to come. Meanwhile, the clock is ticking. Every unsold truck on a lot represents not just a financial burden, but also a symbol of the larger struggle these companies face. If the current inventory crisis drags out much longer, it won't just be a quarterly setback, could reshape the entire future of the American pickup truck market. Dealers themselves are fighting back in ways we haven't seen in years, and it shows just how desperate the situation has become. Some are launching aggressive discount campaigns, stacking rebates on top of incentives, and even quietly cutting prices below invoice just to keep cash flowing. Others are experimenting with creative financing, offering extended loan terms, deferred payments, or bundling add-ons like maintenance packages for free to sweeten the deal. These aren't the moves of confident dealers riding a wave of demand. These are survival tactics, and they're spreading fast. We're also seeing something else rare: dealers pushing back publicly against the automakers. Normally, franchise owners keep criticism quiet, but now frustration is boiling over. Some dealers are openly calling out Ford, GM, and Stellantis for overloading them with expensive trucks nobody wants, accusing the companies of being completely out of touch with what the average customer can afford. That kind of open rebellion signals just how much tension is building between Detroit and its dealer networks. When your partners on the ground start sounding the alarm, it's a sign the crisis is deeper than executives want to admit, and all of this is colliding with a bigger cultural shift. For years, full-size trucks were untouchable icons of American life, seen everywhere from construction sites to suburban driveways. But now, more and more buyers are asking themselves, do I really need a giant truck that costs as much as a luxury car? Gas prices, rising insurance premiums, and ballooning loan payments are forcing families to rethink what practical really means. That's why compact pickups, midsize SUVs, and even crossovers are quietly stealing market share right under the big three's noses. The cultural side of this matters more than most people realize. Trucks have always been sold not just as vehicles, but as identities, symbols of toughness, independence, and success. But when those symbols come with crushing debt, higher operating costs, and constant financial stress, the image starts to crack. Shoppers who once dreamed of driving the latest F-150, Silverado, or Ram are walking away, not because they don't like the trucks, but because they can't justify the sacrifice anymore. That shift in mindset is dangerous for automakers because once the dream fades, loyalty often fades with it, and that's exactly where we are right now. a perfect storm of economic pressure, overproduction, and cultural change, all hitting the most profitable segment of the American auto industry at once. For Ford, GM, and Ram dealers, the question isn't just how to sell more trucks, it's how to survive this new reality before it swallows them whole. Wall Street is already paying very close attention to this unfolding crisis, and investor confidence is starting to wobble. For years, analysts treated truck sales as the bedrock of Detroit's financial stability, predictable, profitable, and nearly recession-proof. But now, those assumptions are cracking. When earnings reports show rising inventory levels, ballooning incentive costs, and shrinking profit margins, the stock market reacts fast. And investors don't just care about today's sales, they care about the trajectory. If they see that the golden goose of the auto industry is suddenly limping, they start rethinking the long-term value of these companies. Ford, GM, and Stellantis all rely heavily on their truck divisions to carry the bulk of their profits. When Wall Street senses weakness in that foundation, it triggers a chain reaction. Share prices slip, credit ratings come under pressure, and suddenly borrowing money for new projects like if development becomes more expensive. That's why this isn't just a dealer problem or a consumer problem. It's a financial system problem that could ripple across every part of the industry if the crisis drags on. And here's the kicker. Investors aren't blind to what's happening in the broader economy. They see consumers stretched thin, interest rates still high, and affordability sinking. That means they're not expecting a quick bounce back. Instead, they're starting to price in the possibility that this slump could last much longer than the automakers are admitting publicly. That kind of sentiment shift is brutal, because once Wall Street loses faith, it takes a mountain of good news to bring it back. Meanwhile, automakers are trying to put on a confident face. Executives talk about short-term headwinds and temporary market adjustments, but the numbers on the ground tell a different story. Dealers stuck with overflowing lots aren't talking about short-term pain, they're talking about survival. And when that disconnect between corporate optimism and real-world struggle becomes too obvious, it only fuels more skepticism from investors, customers, and even employees inside the companies themselves. All of this puts the big three at a dangerous crossroads. Do they double down on production and hope the market rebounds? Do they slash output and risk layoffs and angry unions? Or do they finally confront the reality that the truck market itself may be shifting in ways that can't be fixed with discounts and incentives alone? None of those options are easy, and every choice carries huge consequences for the future of these companies. Union workers and planned employees are already bracing for what comes next. Every time talk of production cuts surfaces, it sends shockwaves through the workforce. Shifts get shortened, overtime disappears, and entire plants start worrying about shutdowns. For communities that depend on these jobs, even a temporary slowdown can devastate local economies. Restaurants, small businesses, and suppliers all take a hit. Workers know that when trucks stop moving, paychecks stop flowing, and the ripple effect stretches far beyond the factory gates, and that's the human side of this crisis. It's not just about profits, stock prices, or dealer incentives, it's about the thousands of families whose livelihoods hang on the success of America's most iconic vehicles. The F-150, Silverado, and Ram 1500 aren't just products on a balance sheet. They're the backbone of Detroit, the bread and butter of dealerships, and the lifeline of towns built around auto plants. When those trucks stop selling, the pain is real and widespread, but here's the bigger picture. This may be the moment that reshapes the American pickup truck forever. For decades, the formula was simple: bigger trucks, higher prices, fatter profits. But that formula doesn't work in 2025 the way it did in 2015. Customers are demanding affordability, practicality, and smarter value. The companies that adapt to that reality, whether it's by offering smaller trucks, balancing EV ambitions with realistic pricing, or simply listening to what buyers actually want, will be the ones that survive. Those that don't risk losing not just sales, but the very loyalty that built their empires. So when we look at Ford, GM, and Ram right now, what we're really seeing isn't just an inventory crisis. We're watching the foundation of the truck market being tested in ways it never has before. The dealers are feeling it, the workers are feeling it, and the customers? They're making choices that could permanently shift the balance of power in the pickup world. This isn't just a storm that will blow over, it's a reckoning. And how the big three respond in the months ahead will decide not just their future profits, but the future of America's favorite vehicle. Because if they can't fix this crisis, then the golden age of the pickup truck may have just reached its breaking point.